Hello everybody, welcome to TraderMerlin Show. It is your weekend edition, Friday. Goodness gracious, what a great week that was. So cheers to everybody out there. We have some careful observers who have noticed the ice cubes and been asking about the whiskey. So I'll tell you what, I'm going to start things off right there. Start with some fun things, and then we'll get into the nitty gritty of these markets and some very interesting news with regards to inflation and just overall market dynamics. So hello, Tomasito, Margaret, Big Eb, Walter. We got Boss Poopa with his drinking Mount Gay today from Raleigh. Love Mount Gay. Good stuff. Les Gold as well. Giselle, good to see you as well. Rob, awesome. Good to have you guys with us for our Friday show. Let's have some fun. All right, so that's what I got. You guys can see I got a nice little picture of the dollar slowly being eaten away as our graphic. Here is a question I want to just start with just for fun. Manuel says, it looks like you have a giant ice cube in your glass of whiskey. Is that true? Or is it just a bunch of ice cubes that appear to be giant cube? If it is a giant cube, how do you make them? Very carefully. I sit there with this, I keep my hands in the freezer on the side of it until it freezes over in a cube. No, I'm kidding. Real simple. If you like, I actually like a bigger cube because it melts much slower, and I just feel like it's a better fit for whiskey. Amazon, this is them right here. You can see I purchased these back in 2020, right as COVID was starting up. But yeah, they're just giant square cubes. They're pretty simple to get, just a large cube tray. And then you also asked about different whiskeys. I am drinking Bib & Tucker today. This is from my friend Carrie, who bought this for my birthday. So thank you, Carrie. This one actually has become quickly one of my favorites. It's really good. Might be a little pricey for some, but Bib & Tucker, as far as what whiskeys, Manuel, really depends on you. You know, you don't even have to drink alcohol, but if you are looking at whiskeys, you got to find your palate. Do you like Scotch? Do you like bourbons? Do you like rye? Do you like wheats? I'm a bourbon fan, although I do have a collection of just about everything out there. So here's the other ones I'd recommend. Michter's is also very good. If you don't want to go the higher price, an easy, cheap entry-level bourbon would be Woodford Reserve. Anyway, that's it. I don't want to encourage alcoholism here on the show, but I thought I'd just throw that out there for some fun and get everybody rolling onto this great Friday. Yep. Exactly. It doesn't get watered down too quickly. I actually like watered down a little bit. I feel like you get more of the caramel flavor comes out of whiskey. I love rye as well, but right now I'm on a bourbon kick. So Bib & Tucker is probably my preferred right now, and cheers to that one. All right, let's see. Let's talk about today's market, because obviously we had a pretty bullish week. I was actually surprised because today we had an inflation number come out, which of course the whole world is watching, and it's talked about this week. It's interesting how we get this ebb and flow of what's important and what's not important. So all of a sudden now CPI numbers have been like the most important thing. As you may have seen, the number came out slightly higher than expected. They're expecting 0.2%, so I'll show you that over here. It's not 0.2%, excuse me. They're expecting 0.7%. That would be a decline from the previous month, which was 0.9. Now we have 0.8%. So it was higher than expected. A little bit of a surprise to me. I kind of thought we would see more of a pullback, just again to make the American people feel like somewhat happy about the week, the holiday season. But this is now, like, maybe it's uncontrollable. Who knows? But we're at 0.8% today. And what that did is that pushes the overall inflation rate up from the previous month, which was 6.2%. Now we're at 6.8%. And it will probably be released on, I think it's going to be released on Monday. It might be Sunday night, but you know, the Monday morning must know thing, I normally release that over the weekend. I also recorded something today, which is specifically about the inflation pieces. And if you look at the numbers, you know, we haven't been this high as far as inflation number growth for 39 years. 39 years. You're getting back into the 80s. And what's important for me about that is if history is any teacher of the future, we got to look at what happened in the 80s. Why did we see inflation gets so high, and what was the remedy? And I think one of the biggest challenges we have here is the remedy for high inflation back then was Volcker raising rates to an astronomical level. And we're right now at less than 0.25%. You know, back then you were looking at 12, 13, 14% Fed funds rate. Holy cow, that translates into choking the economy, which, you know, right now the market's still showing resilience. We actually saw markets surge today, which is really kind of funny. Everything except the Russell, which I'll look at here in just a second. So this was the major news, was this economic announcement, and not only of consumer price index, but when we strip out food and energy, which are the two kind of most volatile components there, those also stayed in line with expectations at 0.5%, but still giving us an annualized 4.9% inflation when we take out food and energy. So to me, pretty important. I think it's kind of interesting to see this data. Now, I received a bunch of different questions on this topic, and let me go through a couple of them. Oops. No, I'm actually going to do this one. I forgot. We got to give a shout out to everybody who's still doing our December challenge. I hope that you are still with it, people. I'm still doing my 100 push-ups today. Struggling, but I'm doing it. Tom, you've got the big challenge with push-ups, curls, and lunges. Les walking and educating and spending time with his wife was the most important one on here. We got Tony singing and doing some gym as well. Michael walking with the dogs. Peter, new addition, running 3 miles a day and reading for 30 minutes. So I hope you guys are all still doing your challenges. Stick with it. You will feel much better for it, especially when you finally accomplish the end of December. And if anybody wants to add to this, you're a little late, but just email me at TraderMerlin@gmail.com and say what you would like to accomplish for the month of December, and I'll put you on. And then I'll restart you up in January so we can continue on for a full 30 days. So there were multiple questions that I thought were somewhat interesting, and I think awesome, Tom, good for you. It's a challenge, isn't it? I mean, it sounds like you were probably doing it before, so you're in good shape. Anybody just starting out, trying to do 100 push-ups a day and all that other stuff is pretty tough. Good to see Les. We got Tom and Les still doing it. Awesome. I'm there as well. So we talked about this before, and I thought this was kind of an interesting comment from Tina. She says, when should you get out of the market? Again, I am not your financial advisor. I guess everybody has a different perspective on what their goals in their accounts are, what their market objectives are, what their discipline and risk management pieces are. Personally, I think that if my answer to when to get out of the market, when should you get out of the market, for me personally is never. I know that sounds weird, but never. I'm never going to be out of the market. I might be going a different direction in the market. So Tina, you say, when should we get out of the market? Well, when I look at a price chart, let me bring up some charts for you guys here so we can just have some visuals. Here's your S&P 500, which had a nice move up of almost 1% today. Again, right back up into that supply. We had one down day off that supply zone. This is a very bullish sign, in my opinion. We barely had any downside movement into that supply zone, and all of a sudden back higher. Bottom line is, if I zoom out and you look at this, when should you get out? Well, you certainly shouldn't be getting out in long positions right now, right? Keep it going, right? Stay in it until the market tells you otherwise. Don't listen to anybody else, like Big Eb says. If everyone is telling you to get out, stay in. I agree. It's challenging sometimes because the economic data, a lot of the fundamental stuff you're reading, things like inflation, it seems like it's overwhelming and it's going to end up crushing the market. And I believe it will. I believe that this inflation and the Fed raising rates and removing stimulus from the markets is going to absolutely crush these markets. Just not right now, right? At some point it will turn. So as far as this market trend, stay with it. You shouldn't get out of this one. But at a certain point, we'll be looking to build some short positions or maybe use options to look to purchase at lower levels. So for me personally, the easy answer to this question is, for Merlin, he should never get out of the market. He should maybe jump into options or move into some inverse markets. And there was a second question along the same lines from Sheena. Good to see you, Sheena. Thank you for sending in questions and listening every now and again. So what would you hold in your portfolio in a downtrending market? And I think that's probably more akin as to what I would be doing, right? I'm not out of the market. I would just be playing it for the short side. So, Sheena, it's kind of a challenging question to answer because it depends on what the assets are doing. So if the markets start to sell off, and I think they're going to sell off because of increased pressure by the Fed to raise rates and to taper. That removes a financial backstop for the market, which has been pushing it up for years. The second factor that I see crushing the market is just straight overvaluation of so many different assets. The third is we have over-leveraging because people have tremendous paper profits right now. I think a lot of you right now would agree. You look at your 401k, your IRA, your investment accounts, you've got some great gains. I mean, we are up 115% since the March lows from COVID. We're up 609% off the lows from 2009. So a lot of you are sitting on huge paper gains, but remember, they're just that. They're paper gains. It's like being in a baseball game, and here you are in the 7th inning, and you're up 12-0, right? You're just kicking ass. Well, the game ain't over. You still got some more innings left. So until you lock in that profit, it's just paper gains. And I think if we have a quick, sudden move to the downside, which I think will probably happen, I think it'll be a system shock. probably next year would be my guess. I think sometime late January, February would be a prime time for it to have a nice market correction, but it'll probably happen later than that. That said, a lot of those paper profits would disappear. So to go back to Sheena's question of what would be in my portfolio, again, it depends on what's happening at that time. But if this market does roll over, it's very easy for me to figure out what I'm going to get into, right? If I see, let's say this, and let's start to plan out, I know we've already done this, I know, but let me just start to look at what might start to set up a downside move for me. So you guys can see I've got 3 blue lines on this chart and a red line, right? Right now, it's just buy the dips. It's trending up, right? 9 more outs to get, Boss Poople, you got it. It ain't over until that last pitch is swung out and missed, you know? So I look at this, it still looks really bullish. Granted, we are at all-time highs in the S&P. We could look at other indexes, but they're pretty much the same. You know, if we get down below this, let's call it 4,500 on the S&P, well, that doesn't mean I need to be getting out, but it means I might start looking for deeper buying opportunities, right? I might be looking to sell some puts on the S&P at, let's say, 4,300 or 4,250, depending what the increments are. So that might be one approach, which is let's sell some puts, collect some premium because I still would like to own it if it got down to, let's say, 4,250. Why? Because it's still in an uptrend. But if it breaks 4,250, I would probably be liquidating most of my long positions and looking at buying some puts to gain on this downside move. So I've got kind of three levels here. You see I've got 4,500 as the top one. Call it 4,250 is this next one, and that's really the bounce point we had in early October of this year. And then the last one before I think the bottom falls out and we drop all the way to 20% is right around 4,030 on the S&P, and that's the origin of this gap that's already been tapped. Okay, so to me, it's not about getting out, it's what do you hold in your portfolio. So to answer your question, Sheena, I would be holding puts long, right? I'd buy puts, or I'd be selling some puts depending if I want to buy long here. So I would sell puts until we broke 4,250. After that happens, I'll be buying puts, right? Maybe even selling some calls at higher prices if the premium's there. I may also be looking for different instruments. So for example, I don't have it here because I don't really want to be using TradeStation anymore. But if I go out like we've done before and go to something like stockcharts.com and it can go to perf charts, right? Which is performance charts. And I would line up the 11 S&P indexes. And I would look through there and say, okay, well, which one is the weakest right now? Because the market rolls over, those most likely are going to continue to get weaker. So if that happens, I would probably be looking for some of the weaker market positions. And maybe I'll just do that for you guys here. I think it's stockcharts.com. All right, so let me just show you here. I'm not going to take up too much of our time, but you go to stockcharts.com. You can go to the very top there where it says sharp chart. I like to go to performance or perf chart. And I'll just go SPY. We'll do XLE, XLF, XLI, XLU. I'm going to all the main S&P sectors. Let's go to IYR for some real estate. Let's go XLK for technology. And that gives you a basic idea, right? So when I do that, you know, we can see that everything's looking great. I mean, it looks awesome over the last 200 days. But what if I wanted to shorten this down a little bit and say, instead of 200 days, I want to go, let's say, the last 90 days. All of these still look pretty good. I might look down here at the bottom, and you can see healthcare looks to be the weakest, but they're all really having a strong surge because this market has bounced. If the market starts to roll over a little bit, and let's say we do ultimately break this level here at 4,500, which isn't that far away, guys. It's actually very close. It's not the end. It's just saying it's the first time it's actually shown some weakness and really started to make some new lows. If it breaks 4,500, I'll probably look back here and say, which one's been selling off the most over the past couple weeks, showing the biggest weakness? And yes, would I be chasing something if I did that? You bet. But I'd much rather chase it knowing that it's the weakest right now as opposed to try to short it when it's a strong one and be left holding the bag as it continues to move up against my short position. So that's one way I'd be doing. I'd be, looking at the overall market sectors. I like to just buy directional put options. That's one way to do it. You could also go into some of the inverse ETFs like SH or SDS or QID. Those are leveraged inverse ETFs, which are risky because you're using leverage, but they are great trading vehicles. You could also start to look at some of the historically inversely correlated instruments like gold, but right now that connection, in my opinion, somewhat broken. I just don't see gold performing like it used to, which would be when markets are showing weakness, there's that flight to security. Well, gold, this looks pretty boring, right? There's not much going on with gold right now. So I would wait until gold started to move up a little bit before I thought about buying in. For me, you got to get above 1875 on gold before it starts to look rosier. Right now, it's just a little bit tarnished. How would you determine overvalued EPS, PE, discounted cash flow? Generally, it's off PE ratio, and not that it's overvalued, but if the historical average, and it's a great question, Tom. It's kind of challenging because the historical average of the S&P 500 is around 15. But remember, that's taking in some really high numbers. You know, your high flyers like your Netscape, your Zoom, your Amazons are still going to have very high. Actually, maybe not Amazon anymore. Generally, they have high PE ratios versus something like GE probably has a very low PE ratio, right? So they balance that out. So I think it's a broad generalization to say, hey, let's look at the S&P 500 PE ratio as my metric. So let's say I'm looking at, solar companies, right? And I thought, I want to be looking at solar companies. You could put a list of all the solar companies together, look at their PE ratios, and see which one might be a total outlier. I'm also looking for things that look technically like they've been way overbought and over accelerated. And there's certainly a lot of stuff out there. What does Tibor say? I don't get into something I don't understand, puts or not. There you go. Well, with Tibor, I would suggest if you don't know puts, learn puts. Options are one of the best vehicles to capitalize on a downside market and minimize your risk at the same time. So if you let's say, Tibor, I don't know if you're a futures guy or a stocks guy, whatever the case may be, leverage in the options market can just give you that extra little added rate of return if your analysis is correct and you use stops in the right way. So, one of the things I determine overvalue, Tom, again, is PE ratio from a macro fundamental piece, but it needs to be the PE ratio kind of for that sector of that security that you're trading. Margaret says RSI. RSI is one measure for overbought, oversold, but there's a problem with that. So let me show you. Let's see if I can bring this up here. I know I don't have a lot of technical indicators on here because I'm not allowed to use them because I don't pay for the service. But let's go to RSI. Right? And there's multiple ways to use relative strength. So here's RSI. The general feeling is that if RSI is above 70, that it's overbought. If it's down below 30, it's oversold. And that is kind of a blanket tool that some people use. I don't necessarily like to use it for that, but let's see if we can come up with an example. So here you have the chart of Bitcoin, right? And Bitcoin has just been getting smoked recently. Notice that on RSI, it's still not showing that it's oversold. So it has more downside. And again, I do think you could see it hit $40,000, no problem. I mean, the way it's moving, it could hit $40,000 by Monday with the weakness in crypto right now. But it will come back at some point. Generally, people are going to be looking for, when they use these indicators, as, it's oversold. And if Bitcoin does get down to, let's say, 40,000, it'll be in an oversold situation on RSI. To me, that's not necessarily a buying opportunity. If it came to 40 and I saw this strong demand zone here, and let me just map it out and put it on our chart. All right, and I'm going to do a real tight demand zone. I'll do that guy right there, that little yellow box. That's where, if it does continue down, I expect it to turn, right? If that happens and RSI is oversold, great. But personally, I don't care what RSI tells me, right? I'd rather make the decision off of price itself. But if RSI gets down below 30 and Bitcoin ends up in its demand zone here, awesome, right? Here's another example. Let's look at Apple, which I think someone asked me to negative divergences. Yes, there's also a technique called positive and negative divergences, which I think do work well. You look at something like Apple right now. Again, if you just use the textbook way, not looking at convergence or divergence, here you have Apple at all-time highs. It's going to be $3 trillion next week if this trend continues. I believe it's $2.94 trillion market cap right now. Look at our RSI at the bottom. If you're using RSI the traditional way, it's going to tell you this thing is way overbought and you want to jump in on it short. And I would disagree with that. Just because something's overbought, never use the indicator as the factor to make your trade. It's what's going on with the price. Right now, as crazy as it is, Apple's just saying, hold on. And I do see some unfilled gaps on Apple, which look very appealing to me to the downside, but right now I'm not, I can't touch Apple anyway. It's just part of my rules. But yeah, just stay long Apple until it tells you no. Right now it's screaming to the upside. Bye, bye, bye. Let's see. Merlin, are you still holding long on these Bitcoin drops? Yep, I'm actually buying more. I'm pulling the Michael Saylor. When I see nice big drops, I'll add more to my position. Absolutely. So yes, I recently added in a bunch more. We'll see. If we get down to 40, I'll definitely buy some more Bitcoin. I'm not concerned with it. Again, when I say that, remember, this is with capital that I can afford to lose, or at least in my opinion, lock up for a long time. I don't think it's going to lose. I just think that if it does get to 40 or drop below that, it might take a year or two to get back above that. But when it does, I'm looking at $100,000, and ultimately down the road, I'm looking at, $1 million plus would be my target for this, a decade down the road. All right. Yeah, I think so. Chris Marconi says Apple $3 trillion is what, $188? I think it's something very close to that. I mean, we're almost there. So, you look at the move that happened in Apple today. It was up 2.8%. It could very easily hit that on next week. Right now, the momentum and the talk track is Apple's going to $3 trillion. And this is one of the things that I mentioned when I got kicked off of CNBC. You can actually go, I think I may have it on my YouTube channel. If you just type in, Merlin Rothfeld CNBC, you'll be entertained. I posted this a long time ago. Unfortunately, CNBC hasn't taken it down. But they asked me, her name is Amanda Drury with her lovely Australian accent. She's like, so Merlin, tell me what your thoughts are on gold. I'm like, pitter patter. And so I'm commenting on gold, and I think it was 1,800 was the price level. And she said, are we going to see gold at 1,800? I was like, well, it's not a question of if, it's just a question of when. I go, everybody here is talking about how gold's going to get to 1,800. To me, it's like a Ouija board, right? Y'all remember all the Ouija boards, right? You'd sit around in the room, everybody be quiet, we're contacting spirits that are in the room, and Aunt Mary, can you hear me? Y'all get your fingers gently on that little spade-shaped object with the glass hole, and it's like all of a sudden it slowly starts moving to Y, E, S. Oh my gosh, man, amazing here. Look, the more people think something's going to happen, the more likely it will happen. So, people thinking it's going to go to $3 trillion market cap, it's going to happen. I think it'll get there just because that's what everyone's talking about. Now, how much higher? I don't know. There's so much talk track about their future and the goggles and augmented reality and their driverless cars. At this point, a lot of speculation, but hey, it's Apple. They haven't really disappointed down the road. Oh, hey, thanks, Walter. Yeah, I know. It's funny, we only have 53 viewers today. Well, it fluctuates. We get in between 40 and 80 in a day, but it would be nice one day to be like, hey, you know what? We've got 7,000 people watching live. I doubt that'll ever happen, but hey, you know what? I just enjoy doing it. But thank you for your support. Appreciate it. Tom Barr says, don't touch Apple, just touch the options. Again, I agree, and I think for people who don't understand options, it's an important thing. You can get involved with Apple with way less capital and basically increase your rate of return. So instead of ponying up $179 per share, if you got 100, you're looking at $17,000 to make that one trade. Whereas I can go into options with a few $1,000s and control the same amount, thus increasing my rate of return at a significant clip. All right. Big Ed says, I have pretty much screwed up every Apple trade I've ever made. Yes! I'm happy for you, Big Eb. You know why? Because you can be part of the Merlin No Apple Club. Just go into your trading plan, page 3. I want you to put an Apple logo in the upper right-hand corner of the page and put a circle around it and a red line through it. Just like mine is on my page 3 of my trading plan. It has been there since 2001. Hey, if you know you're bad at Apple, then stay away from it, man. I don't care. If I was bad at trading the Russell, I would remove Russell. Just get it out. There's too many things to focus on. Let's see. J-Bass says, bought some DOT, loving the dip. Still early in the game for the Ethereum competition. I agree. I actually did buy some Polkadot. So the new additions, and I won't go into the prices, but those are in the Crypto Investor Live. They saw my orders out there. Saw me make these trades, but I bought actually some of these trades. Some were made with limit orders after hours. But I bought some DOT. I bought some Render. I'm trying to buy some Sand. Still hasn't gotten to my Sand price. I also bought some Chainlink. And I bought some Solana. So I'm just kind of and Bitcoin. I bought more Bitcoin than of anything else, but just sprinkling around the holdings and trying to build out that portfolio. So for the next rally, hey, I'm in. All right, Chris, there you go. All right, Chris, I need to see your trading plan. I don't know. You have a written out document? I think you're a shoot from the hip kind of guy. I know you well enough. You don't have a written book of all your trading plans, do you? I hope you do. It'll help you out a lot. Merlin Sailor. I wish. That guy's a maniac. I'm not that crazy. All right, let me go back to our questions here. So again, Sheena, what would you be holding in your portfolio in a downtrending market? I'd be holding what I'm holding right now. I actually do still have some cannabis stocks, but not a lot. I think that's a long-term hold for me. I have a lot of different crypto assets. With regards to equity market positions, I do have some short Facebook right now, which is interesting. I also have some short, Snapchat. So I bought or sold short some more Snapchat. I was in it a while ago, took a big loss on that one. And then that is all kind of speculation plays on my of those sectors for me. If the markets start to roll over, then I will start to build out, again, more short positions with options. I'll be buying puts. Depending on where we are, I'll probably be selling puts first, which would commit me to buy at certain levels, thus gaining a certain rate of return. If those levels are broken, then we have to reverse our thinking and start thinking about just shorting. In that case, I might do what I did back in 2008, which was my best trade, which was I went long SDS and QID. Those are double short S&P and NASDAQ, right? So now there's triples, but I don't know. Triples are just a little too much, so I stayed with the doubles. What else would I be doing? Futures market's an easy way as well. You can just sell futures on the S&P. That's the easy way, or different indexes. So that's what I would be doing. Again, different strokes for different folks. I think many of you might have a different idea about what you wanted to do. Nope, didn't short Mara. Nope. I'm not really shorting anything tech, crypto related. So here's Marathon. Oops. There's Mara. Am I shorting it? No. Not staying away from that one. I mean, if you look at the trend, it still looks pretty good. If anything, right now, it may actually be a buy part. Yeah, Snapchat. Yeah, I'm trying to forget about it. You look at Snapchat. I've been in this one for a little bit, but this was back initially. I thought we were going to fill this gap, and I think it rallied up to like 40, and then I ended up shorting it. Was positive for a little while, and then just stopped me out. On this most recent jump down, ended up buying on this pullback up here. So it started back up to the 56 area, and that's where I made it, is 56. So it's doing okay right now. I still think we're going to see, back into 2008. Which one are you talking about, NJ? Snapchat, that was back here. That was 2020. I remember the jump up because it gapped up huge, and I'm like, this thing sucks. Good. Yeah, I wouldn't short Marathon. I think you're actually got a decent spot on Mara. The only issue is right now it's this trend line right here, and I know that this is not the best way to draw trend lines. It's generally following that trend. So if we start to get below that, or maybe even break this most recent low that is established on the 6th of December, just a few days ago. Why is that? It's really 6th of December. Oh, yeah, we're on the 10th today. Man, time flies. The low point of this one was 35.97. So, if it gets below 36 and closes below it, you might want to think about getting out of your position. So, FB. I've been in this one for a couple weeks now, and as it came back up into this retest here, so I saw when we broke above it, I am still overtly bearish on Facebook. I just think that the challenges that they're facing legally are difficult. The whole switch to Meta was kind of a punch in the gut. I think that is going to be a positive thing for them overall. But as we came back in here, we had this gap down. It retested it. And then I think we came back into it again right around 352 is my entry on that one. So I'm a little bit low as it came into the zone. But 352, so I'm only up 11 points on that, or 20 points on that one. Not too bad. What about SQ? Can we look at that? Sure, SQ. That now changed their name from Square to Block. The challenge with the Square is, remember, we had this yellow box drawn in here for a while, and I think we mentioned that if it gets down below that and closes, there's a short opportunity. Well, you got it. We weren't watching this as it happened, but when I drew this box, it was before this broke. It's not looking so good right now. It would not surprise me at all to see this thing continue down to the 155 mark. I still am bullish on Square long term. I think you're looking good. My 2x shorts, 2008. Yep, bought long SDS and QID, double short. Love it. When we broke 1256 on the S&P 500. No, I don't think Facebook will change its symbol. I don't think so. I mean, they can't get Meta, right? Meta is an ETF. It's the Round Hill Metaverse ETF. So, nah, I don't think so. I think they'll stay with I was planning on selling SQ puts at 160. Not sure now. Let's go SQ. The 160s, huh? Yeah, I mean, it really depends on the premium you could get for that, right, Big M? All right. I think, yeah, right. Nice retest of that box. You know, you might not get as much by going down to the 155 mark, but you know, to me, that's where it's headed. It just feels, for whatever reason, again, I'm not looking at the business operations. I'm simply looking at price charts. And for me, price charts tell you everything you need. Yeah, I could see 150. I'm going to put it down here. I should be doing more of this because I always revisit things. 155. I'll do 156. And I'm going to put a little label on this one just because I always say this stuff and then like time goes by and I forget when I said what. So let's see. This would be sell puts at 156, probably in 155 strikes. I'll do 155, and then I'm going 12, 10, 21. There you go, just for fun. I did. That's pretty funny you say that, Walter. If you watch that video, I think I said, you know, break out the bulldozers. I think I said break out the bulldozers. We're going down in a big way, and I usually wear cufflinks. Today I've got conquistadors. Got my conquistadors on there today. You just stayed long Apple. Did you ever figure out what it would be worth? No. Jeff, it would be worth an unbelievable amount of money. So if I were to do that, and again, you shouldn't do this. You just torture yourself by going back and saying, oh, I shoulda, coulda, woulda bought this or done this. So if I go back here, and it'd have to be on a monthly. If you were to go back and look at the price of Apple when I was actively, basically gave up and threw in the towel, it was back in early 2001, which would have been somewhere probably, because I moved to Italy in March, so let's just call it December of 2020 is where I was just actively trading it and ended up dumping it. That would have put Apple at somewhere around 27 cents once you added all the splits. So yeah, certainly I'd be a gajillionaire right now if I had just 1,000 shares. Not 1,000, I wouldn't be a gajillionaire, but you know, a lot of the stuff I was trading was very big blocks. Very big blocks. So there you go. Thanks for rubbing that one in there, Jeff. All right, let me go through some more questions. I want to make sure at least I get to everybody's question that said today. This is kind of a subjective one. You know, I don't know. Why are the markets rallying with such high inflation? Dave, I think it just has to do with the markets priced in 7% inflation. From the number I was hearing today, most of the industry was expecting the CPI number to come out today showing 7% year-over-year inflation. We came out at 6.8%, so market's like, oh, it's not as bad as it was. Boom. At some point, I think you guys all agree. If you don't, I'd love to know why you disagree, but please type it in chat. But I think you would all agree, at some point, the proverbial chickens will come home to roost, and this market will go down to levels that it should be at. You know, you look at this price chart here. Let's look at it on a monthly. You know, this is something I talked about in the video I did on inflation for OTA. But, you know, we look at these moves right here. Right from this low where my cursor's at, that's 115% move up in a very short window of time. You look at from back on this period down here in 2009, that's 609%. What people seem to forget is you might remember how catastrophic the dot-com bubble was, right? The dot-com bubble is in financial textbooks. So is the financial crisis. It was one of these things, you know, even Macaulay Culkin couldn't make the scream face look more panicked, right? It was like the sky is falling, we're going to hell in a handbasket, systemic failure of the United States, blah, 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 blah. That was a traumatic moment. Those two events on this chart right now, could you spot them? They don't look like anything. This is back here. This is the dot-com bubble, which looks like a blip. Nothing. The second one over here, this is your financial crisis. Nothing. This first one on the left was 50%. One on the right was 57%, right? So, yeah, waiting expectantly for the drop. I agree, Boss Poop, but it's not a question of if, it's just when. You know, and if we look at a 50% drop in where the S&P is at right now, let's just say right now we're at 4,700. Well, that means getting back to 2,350, which really would bring us back to a normal trend. Here's 2,350. Now, I'm a little bit cautious because I think a lot of you would understand that if we get down to 2,350 on the S&P, most of your family or friends' 401ks are gone, like decimated, just evaporated gains. So because they've been dollar cost averaging. So it's one of those things I think you got to be very careful. You know, I don't know if we get to 2350, but it's not out of reach. That's for sure. If I put something like this, no, not the 20. Let's put that 50 period moving average on here, right? This is the 50 period moving average on a monthly. You know, you notice that we're pulling away at the most aggressive pace since 97, right? This is the S&P 500 futures, and you can see the rate of acceleration away from this moving average is the highest it's ever been. Look where we are right now. This is a monstrous pull away from that moving average. So at some point, this will come crashing down, and I'm hoping it probably won't because I got a little too overexposed last time. But I'm hoping that the next time it starts to roll over, I'll be in my 420 put options like I was last year, right? It'd be a totally different story. Like, oh, okay, I'm fine losing 65,000 when all of a sudden I got 420 puts and the market drops 50%. You know, now you're talking a 7-figure, maybe 8-figure trade on that one. Well, I'm probably not going to put that much exposure to the market, but just throwing it out there as a hypothetical. It will go down at some point. Markets are rallying, Dave, right now because I believe that people feel that the Fed is still backstopping the markets and that there's still opportunity out there. I think it's one of those ones where it's like who's going to be left holding the bag at the very end of all this. Let's see. Tom says the financial crisis was based on a ridiculous government program, called subprime. What will we name the coming crash? The Powell Pop. I think the most appropriate name for it would be the everything bubble. It's the everything bubble. It really is. It's equity market price. I mean, look at the equity market price, and this is insane. That's insane. You know, if I showed you this chart right here and said this is the market from up into 2000, then you had the huge crash in 2000. Oh my gosh, the humanity. And then this monster market rally, huge crash. These were such memorable moments. But people seem to not want to look at what has happened since then. This is like, holy cow. Yeah, I think when you look back in history, this will be the mother of crashes. But who knows? Hopefully we position ourselves appropriately, protect the positions that you have if you start to see things rolling over. But don't panic. All right? It's just all opportunity. Shouldn't be freaking out. And the sad part is, for those of us who will be capitalizing when this thing finally crashes, we're going to be like this. Yeah, market was down 8% today. Woohoo! And your family and friends are going to be like wiping their tears away. So it's like, let's try not to be overexcited when we're capitalizing on a downside move because the vast majority of people will be losing their shirts. All right, how much time do I got? Oh, got to roll. Here is for Heather. She says, can you look at the following stocks on Friday? We looked at Apple. Look, Apple, for whatever reason, is just a rocket ship right now. Look at that chart of Apple. Goodness gracious. You talk about accelerating away from moving average. Remember, I've mentioned this one many, many times. The analogy I like to use. Is if you put a rubber band around your wrist and you pull it just a couple of an inch or so, it's not going to hurt you. If you pull that rubber band, let's say 6 inches, it's going to leave a little sting. Well, what you're looking at right here is like you've pulled the rubber band like 10 feet away from your wrist. It's so stretched out, it's literally cutting the underside of your wrist. And as soon as you let go of it, wham! I mean, this is overextension on a colossal level on something like Apple. Granted, they're doing great, right? But a lot of money's pouring in. A lot of money's been fabricated. Again, we've had $16+ trillion created in the last 2 years alone. And in the history of the United States up to 2020, we only created $4 trillion. So, let's see. That was Apple. Tesla. Again, Elon Musk out there selling more. Look at that extension. Goodness gracious. Elon has been selling a ton. He just sold another $1 billion worth today, or maybe it might have been yesterday, but I know he sold it this week. That could have been part of the reason we saw this thing push down. Notice I've actually got this right on the 50-period moving average, which is kind of interesting. We have not closed below the 50-period moving average since middle of this year. So this could be a trigger as well if it gets a close below that. Nice little sell-off. It looks like a descending triangle right now. You guys all see that? You got this kind of making the same lows, but the highs are drifting lower and lower, which is going to be right through there. Ballpark. Right? So that's actually fairly negative for Tesla. As great as Elon Musk is, and as I don't know if you guys saw his comments to all the CEOs, he was interviewed with a Wall Street Journal. I loved the interview. He's awesome. He's like, don't do the stimulus. Don't do the infrastructure bill. Get rid of it. It's not gonna help. You're making the problem worse. It was really, really good. But anyway, whatever the case may be, Tesla's chart not looking so good right now. And conveniently, this bottom line right here, where it kind of is basing, is right at 1,000, a wonderful whole number psychology level. Disney, oh yes. All right, so Disney, let me get moving averages off here because I'm not usually a big moving average fan. We'll hide that one. Disney's probably the worst of the group. I mean, Tesla looks like it's starting to get weaker, but it hasn't really broke yet. Disney already broke, right? Disney was consolidating really for almost all of 2021 up until its earnings announcement, where it dropped from roughly $174 all the way down to $162. May not seem like much, but that's a pretty big unfilled gap. You also notice it back here on the 6th of November, we jumped up and formed a gap which has also been unfilled. So given the trajectory that's going on right now with Disney, it would appear to me that this 127.50 mark is the next logical target. So as much as we love the most magical place on earth, unless you're a parent with youngsters, then it's just absolute torture. I think that Disney, it's just poised to be going lower. You know, it doesn't mean it can't bounce and set all-time highs. I'm just going where probability is telling me. And the river at this point of price is flowing to the downside. Therefore, I should be thinking short on Walt Disney. Ugh, sorry, Heather, if that goes against your thoughts or analysis, but that's what I got for you. Disney broke its big base. Yeah, exactly. It did. I'm put another line up here. Right here. We were just sticking to this line at 167.66, for months and months and months, and all of a sudden it broke it. Boom. Surprised that we had this big bounce right here. It didn't really bounce off a strong demand zone. I think it should have gone down further to, let's say, 136. But hey, price does what it wants to do. Right now, price is just getting weaker. Do you think the market would drop if Kamala became president? I don't know. Honestly, I stopped speculating what would happen if so-and-so became president. I don't know. And again, I don't like to go political. It's funny, yesterday the conversation started going more political with John, as it usually happens. But I think you remove the fact, I know a lot of people here just don't like Biden. Some of you think he's great. Who cares? I don't. That makes no difference to me. I think that there's this perception that he's kind of aloof. I think that if Kamala got in there, younger, maybe more progressive, maybe more looking at more decisive action on things that might be more akin to what the younger people are looking at. Other than that, I don't really care. I really could care less. If she becomes president, I mean, obviously, I don't want to see a president die, but whatever happens, happens. All I know is the only thing I can control is the way that I act to this information here. That's the only thing I can control. So I keep my opinions, emotions out of it. Hopefully it doesn't happen. If it does, whatever. It's not for me to hypothesize on it. It just is what it is, and I'll trade price. I mean, the only time that I actually really was heavily involved, especially with elections, was the last one when Hillary Clinton and not the last one, well, before last, where Hillary Clinton and Trump were going at it. I bought a whole bunch of puts the night before the auction because it just seemed like that Trump was going to win that one just from the talk track that I was seeing, but the mainstream media made it seem like Hillary was going to win. And then that night, as the results started coming in, I just started buying more short futures contracts and ended up being one of the best trades. It was awesome. I didn't really care about the election, to be honest. It wasn't, obviously my political views and interests in America are mine, and, the president or our country, it's going to leave it down whatever path it's going to go. I just vote, and hopefully my vote makes a difference. So even if I don't believe the voting system, I'm still going to vote. All right, let's see. Up is up, right? Exactly. Up is up regardless of president. But, what if and when something like that happens, I think it is prudent for us to look at it and say, okay, what's her platform, right? So let's say hypothetically, something happens to Joe and we get Kamala in there. Great. Okay, fine. Whatever. Now we have to look at her platform and say, is she lined up with the same things that he was into? Is she more aggressive in certain areas, right? Because now maybe she'll start to push certain agendas, which may not have had a big move because it wasn't on Biden's agenda. So that's probably the only thing I would be looking for, not, oh, well, I don't like her, market's going to tank. Forget that stuff. But how might her views on the market economy help me in my portfolio? All right, did I not post it? I didn't post it. Oh, actually, yeah, that's why I didn't post it. There's, oh my God, any Jesse Smolt trades for us? Wow. You know what? I think he got, I think it's, was it 5 felony counts? I think he had 5 felony counts for lying and doing all that stuff he did. I mean, just what a crazy state of society. And he's still maintaining his innocence, but it sounds pretty clear-cut that guy was just flat out lying and making stuff up. Go to jail, buddy. Serve some time. You shouldn't be doing that kind of... Anyway, get my politics out of the way. What else do I have for you guys? I had some stuff. I think we pretty much got through it all. We talk about crypto. Again, I still don't think crypto is done with the slide. I think you're going to see this continue to drift down. You notice right now, again, actually just started off here recently. We got another pretty big slide going on in crypto. You see on my list, most of it's red. There's some pretty big ones. Render, man, I'm taking a hit on Render, which is good because I just bought a little bit. I'll buy a bunch more if we get down to 220 on Render, 215. That's my next one. No problem. Hey, good to see you, Walter. Thanks so much, and thanks for trying to promote it and get people out there. All right, I'm going to wrap things up. There is no real economic announcements for Monday. It's really just kind of a flat day, not only for economic announcements, but for earnings. Next week, Thursday is only the only real day for earnings announcements. There's a couple big ones we'll talk about later on. Obviously, I think what you'll see over the weekend is the talk tracks start to build up about what the Fed's going to be doing. Remember, on Wednesday, they come out with their rate announcement. Don't expect anything there, but they will also be talking about their press conference. And I think that's where we start to get a much bigger idea as to what 2022 will start to look like, and also maybe the level of panic going on inside the Federal Reserve over this inflation issue, which the numbers are starting to show up. It's kind of out of hand, no longer transitory, right? So that's going to do it for me again. If we got some new people here, hit that subscribe button, a little bell to remind you when we do the show live. If you are a veteran and you like today's show, give me a little thumbs up. Of course, you guys can always leave comments down below the YouTube videos. That does help me, surprisingly. You can comment down there whatever you want. You can keep a whole discussion thread going underneath the videos if you like. And of course, I generally will answer the questions underneath the YouTube video first. If you want something personally, you can send out to TraderMerlin@gmail.com. That's probably the easiest way to get in touch with me. All right, guys, that's going to do it for me. Thank you so much. Hope you guys have a fantastic weekend. Do something fun. Enjoy your lives, and I will see you on Monday. Take care.